Hi everyone, my name is Jason Heath and I'm an advice-only certified financial planner at Objective Financial Partners. Today, I'm joined by Brenda Hiscock, one of our longtime CFPs here at Objective. Brenda works with lots of different types of clients here in Canada and abroad. And when she works with Canadian expats or those who are becoming expats, it's mainly to help them figure out all the tricky stuff when it comes to taxes, investments, and planning their finances. Today, we're going to cover some really important questions, things like how to handle Canadian tax residency if you're spending time overseas, what you need to know if you're planning to move abroad for good, departure taxes, managing your investment accounts while you're away, even insurance considerations. Brenda, it's great to have you here.
Thanks so much for the introduction, Jason. It's great to be here.
So I'm going to start with a couple of questions. I think one of the most important ones as it becomes to residency is tax residency considerations. If somebody wants to become a non-resident of Canada and wants to spend time abroad, how can somebody spend time abroad and maintain their Canadian residency, or can they? What are some of the considerations with that situation?
Well, there's two main situations where that applies. And so the first would be for those who like to spend considerable amounts of time outside of Canada every year, up to 6 months, and they do that on a regular basis. And as long as you are in Canada at least 183 days every year, most of the time you'll be able to maintain your Canadian residency. You do, however, have to watch out that you don't establish very strong ties in the other country that you're spending a lot of time with. So, for example, if you sold your house in Canada and bought a house in Portugal, for example, where you're visiting every year, and you start to develop really strong ties there, you may accidentally become a non-resident. So the 183 days in Canada is not the be-all and end-all. You really have to look at the other factors as well. The second scenario where that applies would be for those who wish to spend maybe 1 or 2 years outside of Canada, but they want to maintain their residency. So in some cases, you're able to do that and still maintain your Canadian residency. You do have to work with an accountant to establish your residency. Typically, you have to have some type of a place that you can come back to in Canada during that time and a definitive return time in order to maintain your residency.
Okay, so a couple key takeaways that I'm hearing. If somebody is spending a few months down in Florida or Arizona or something like that, sort of a typical Snowbird scenario, they generally don't have to worry about becoming non-residents. And it's not the sort of thing where you decide, I'm going to be a non-resident or I'm going to be a resident. It's based more on the facts. And sometimes you might be able to tilt those facts in your favor, but you need expert advice.
Exactly, but the one thing I do want to point out is the 6 months is a little bit different formula for those who are spending time as snowbirds in the US. So they have a complicated formula that calculates how many days they can spend outside of Canada in order to maintain their residency. But all of the other countries, it's generally the 183 days.
That's a great point. I think with US snowbirds, if you're spending more than about 4 months on a consistent basis, you might need to file a special closer connection form in order to ensure you're not subject to U.S. taxation.
Exactly.
And so what about those who are moving indefinitely or permanently for that matter, and they actually want to become a non-resident for a period of time or forever? What are some of the things they need to do? What are some of the things they need to worry about?
So they really need to ensure that they actually do become non-residents. So the CRA looks at residency, and there are three primary items that determine residency are: where do you live, where does your spouse live, and where do your dependents live? And after that, if that's unclear, then there are a number of other factors that they look at. And so you really want to, if you're leaving Canada, make sure that it doesn't look like you're living there anymore. And so one of the factors that can complicate things when you want to become a non-resident is owning a home. Mm-hmm. And so if you leave an empty home behind in Canada, that may muddy the waters in terms of your residency. And so many people will either sell their home or turn it into a rental property before moving abroad. And in order to become a non-resident, you have to ensure that you have ties in the country that you're moving to, an address that you're going to be living at. Possibly you've got employment there, but the facts pointing to the fact that you have more ties to that other country than you do to Canada. And when you leave Canada, there's a number of different tax filing obligations that come with that. You've got to make sure that you file a tax return to declare yourself a non-resident. If you want to ensure that you determine your residency correctly, working with someone like myself, like financial planner, an accountant, and also the CRA has a form called an NR73 that you can complete if you wish to have the CRA determine your residency. I would say that most people don't go in that direction, but it is an option.
Got it. And so let's talk about that departure tax that may apply or I mean, does apply, but may be a big number, maybe an insignificant number, maybe nothing, depending on the nature of someone's assets. So what is it? How bad is it? And what do people listening along need to know about departure tax?
Yeah, so departure tax is a tax that comes about when you cease to be a resident of Canada. And when you do that, the CRA acts as if you've sold certain assets at fair market value on the date that you leave Canada, and even if you didn't sell them. So for example, if you have non-registered investments that are in a taxable account and they have significant capital gains, CRA is going to act as if you sold those investments on the date that you left, and you're going to be paying taxes on any of the gains that accumulated, that are unrealized at the time of departure. But not everything is included in departure taxes. So, company shares, investment taxable accounts are exposed to departure taxes. But some of the things that are exempt are Canadian real estate, RRSPs, TFSAs. So they don't you don't have to pay departure taxes on those. I should point out, though, that foreign real estate is subject to departure taxes.
It's an interesting nuance. I guess the Canadian real estate is physically in Canada, so the CRA can have more control over the tax if you ever sell as a non-resident. And you touched on TFSAs, RSPs, different types of accounts. So, taxes aside, I mean, taxes as well, but beyond taxes, investment strategy and what you do with those accounts. When you become a non-resident, what are some of the potential options? Working with an investment advisor, self-directed investors, what do people need to think about, Brenda?
Well, I think that a TFSA generally is not a recognized tax shelter in other countries. So one of the things that people are often deciding is whether or not they're going to keep that TFSA, because depending on where they're moving, they may have reporting requirements on the growth of the tax-free savings account because it isn't a recognized tax shelter outside of Canada. And the RRSP, most countries with a tax treaty with Canada, there's an agreement that it can continue to grow tax deferred, but those accounts are Canada specific, so they can't be moved into another country without, the RRSP at least, without creating significant tax consequences. So you really have to be cautious, because if you have your money invested in, for example, a bank or a financial institution that doesn't deal with expats, one of two things will happen. They will either force you to close your account once you've provided your updated address, or they will put you on what's called sell only, where you are only able to withdraw from the investment. You can't make any changes, and that can be really frustrating. So some of the work that we do is really looking at what options are available. So there are some advisors out there that deal with expats and are willing to do investments for expats. There are also some brokerages where you can do some simple self-directed investing. And then there's some robo-advisors out there that also deal with expats. But ideally, you want to get your account situated in an expat-friendly environment before you move. It can be done afterwards, but what I'm noticing a trend over the last number of years is, due to all of the compliance that has come about, it can take 2 to 3 months sometimes to open up a non-resident account once you're abroad. So if you can do some of these things at the front end, it will really help you in the long run.
In a perfect world, how far ahead of a move would somebody start to plan?
I would say ideally 12 to 18 months. I often meet people who are about 6 months away from a move. That's okay too. When we start working with weeks away from the move, we can still help, but it can be very difficult to try to, first of all, fit someone in with the way our scheduling works, and giving the person who's moving the time to do the things that they need to do before they exit. So ideally at least a few months ahead, but 12 to 18 months is kind of that sweet spot.
For sure. I think the sooner you can prepare, the more options you've got, and especially around investments. Some accounts like RRSPs probably make sense to leave in Canada, and there's ongoing planning that's required for those. And sometimes it makes sense to move money where it is you're going.
Yes,
Um,
and it really depends a lot on where you're moving to. So, for example, there's some smaller countries that don't have, established investment brokerages available, and so many people will continue to hold all of their investments in Canada even while they are living abroad and holding them in an expat friendly environment. So just because you leave the country doesn't mean that all of your investments, or the ones that can leave Canada, being, the taxable accounts, those don't necessarily have to leave Canada. You can still often keep your investments in Canada.
I guess if you've got an RSP account that you're managing or continuing to manage in Canada anyways, it may not be the end of the world to have other investments that are in Canada, especially if you plan to return at some point in the future.
And a lot of people, when they first move abroad, they're not 100% sure that they're going to stay abroad forever. And
Mhm.
so, in those situations, it can often make sense to leave your investments in Canada until at least you're established and you're sure that you're not coming back before you start to move things abroad, if that's your goal.
And so I know one thing that I've come across with people is they're worried to leave investment accounts open in Canada. They feel like maybe they need to cash in their accounts to cash in their RSP even to become a non-resident of Canada. Is that a bit of a misunderstanding as it relates to departure from Canada?
I would say it is generally a misunderstanding because, as I mentioned before, the primary residency factors are: where do you live, where does your spouse live, and where do your dependents live. One of the secondary factors is investment accounts, but if that's all you have and all the other ties point to you living abroad, then you're likely factually going to be considered a non-resident. And there is a lot of misinformation out there where people think that they have to close everything down in
Mhm.
order to become a non-resident, and then they'll collapse big RSPs and pay huge tax bills and really
Yeah,
regret that. But working with a professional can help you to really determine the best way forward and to make sure that your move is compliant.
for sure. Thanks for that. And so, what about insurance? How important is it to line up health insurance? Should people keep life insurance or other policies that they've got in place while they're gone?
I can't overstate the importance of health insurance if you're moving abroad. Many countries, most countries, do not have the health coverage that we have in Canada. And if you leave Canada, it can take time to get back on our healthcare system if you return and you're ill. And so having health insurance in place is a top priority if you're moving abroad. And there are a number of expat insurance brokers who can help with that. Now, for life insurance, most people will continue to keep, if their insurance is still necessary, they'll continue to keep their life insurance policies. One of the really important things, because I had this happen with one of my clients recently, they forgot to update their address with the insurance company
Mm.
and they changed banks. And so the insurance policy ended up lapsing and they
Oh
lost their
no.
coverage and their health had deteriorated, so they couldn't get new coverage. So you really want to make sure that the insurance company is aware of your new address so that communications will take place and avoid having a policy lapse, because if your health changes, you can't put that insurance back in place.
I guess that's another good example of something you want to make sure you do well ahead of time. Insurance is notoriously slow to get in place. It's not something that you can necessarily do overnight. So be proactive, I think is what I'm hearing here.
Absolutely, and it's also the insurance is still valid if you pass away in another country. So, you generally can't keep a disability insurance policy. You would need to apply for an expat disability policy in some cases, but life insurance is good to go and can be held on to when you move abroad.
Great. And as far as someone who's planning a move abroad, whether it's temporary, whether it's permanent, who are some of the professionals that they should be talking to? Who should they be getting assistance from? Who should they be engaging?
Well, I think that a financial planner is a great starting point because we can kind of oversee the whole process and give the information on all the things that need to be addressed and then determine, do you need an accountant in Canada? Well, likely you're going to need an accountant in Canada, an accountant in the country that you're moving to so that you understand their tax system, sometimes an immigration consultant, an estate lawyer. Yeah, I think that covers it. Oh, an expat insurance broker.
Hmm. Lots of different people that you need to think about engaging, lots of different decisions that you make. As we wind up here, Brenda, are there any parting thoughts that you wanted to share about people who are planning a move abroad and some of the things they need to be thinking about?
I think if you're moving abroad, I think it's important to get a professional team to help you because it's can be more complicated than you think. You want to be sure that you're exiting the country properly, declaring your non-residency properly, having your account set up properly. There is a lot to do before a move, and I think just trying to wing it can result in problems and surprise tax bills and many things along the way that can happen that can be detrimental if you don't do some advanced planning.
Hmm. More and more people, I think, that are looking to move abroad, whether it's as a digital nomad or retiring in another country, or even lots of Canadian immigrants that have come here may plan a return to a country where they have family or where they grew up. So this is all great stuff. Thanks for joining us today, Brenda, and sharing these insights. I think if someone's planning a temporary or permanent move, there's lots to plan for. Brenda gave us some great guidance on what to watch out for, what to consider. And if you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss any of our future financial tips. And if you have any questions about moving abroad or managing your finances, leave them in the comments below or message Brenda through our website. We'd love to hear from you, and so would she.
Thank you, Jason.